It's just beyond me. Are people really that stupid? Are people really that uninquisitive? Have they really just fallen asleep and gone into a coma that much?
So what customer has $4 billion to drop in gold? I guess it could be Warren Buffett, it could be the Fed, could be the Treasury. I don't know. I asked AI, what would you see if there were signs of a failure at the LBMA? And listen to what they said. First, widening divergence between paper and physical prices indicating delivery stress. Look, we're heading to a time where gold is becoming more important.
And to suddenly see the President of the United States, the richest man in the world, some of the biggest alternative commentators in America, all now this week talking about gold is incredible.
The question is the emperor wearing any clothes or not? Because it's become very obvious that there isn't enough gold to back up even a fraction of the paper promises. And is this the beginning of a run? I don't know.
This is what you have been waiting for. And whether you're a crypto fan, whether you're a gold bar and coin fan, whatever you are, you believe that everyone's right to be able to hold their purchasing power. Hello, everybody, and welcome to another episode of The Resilient Compass. My name is Jason Cousins. I'm the founder and CEO of Glint, and with me is my co-host, Andy Schechtman. Hi, Andy. How are you doing?
Good, brother. How you doing?
I'm good, thank you.
There's a lot of shit going on, pardon my French, in your neck of the woods, all coming from the LBMA. I know this is something we want to talk about, and I think we should, because I've never seen anything quite like what we're seeing right now, Jason. Is there much to do about this in the UK right now?
I think it's crazy that gold's nearly at $3,000 an ounce. This craziness is happening in the gold market, and a bunch of other stuff we're going to talk about today, and that you're going to be absolutely amazed by if you haven't been following this. I think it's amazing that all this is happening and the mass media isn't covering it at all. It's just beyond me. Are people really that stupid? Are people really that uninquisitive? Have they really just fallen asleep and gone into a coma that much they don't pay attention to this? That the gold price up 44% in the last 12 months. What is going on?
Yeah, and that's by design, I would argue. There are very well-read people that live in my neighborhood here, financial advisors and whatnot. They read the wrong stuff, arguably, and they've learned more and more about less and less till they're experts on nothing, in the respect that their focus is so singular that they fail to see things that are happening right around them. But the media really is to blame for that as well. And I want to talk about what's happening in the United States and in London, and how it relates to what's going on with the gold market. A premise just to set. When we talk about the London bullion market, Jason, I saw a statistic the other day that kind of blew me away. They have 279 million ounces of gold stored on paper at the LBMA, custodied by the Bank of England. But there's only 36 million ounces that are available of that 279, meaning some belongs to the Bank of England, much belongs to the ETFs and the Bullion Vault and other encumbered parties. But get this, that 36 million ounces of the 279 million that they have stored on paper is written against 380 million ounces in outstanding spot contracts. They're about 90% short on their ability to deliver. Now, there's been all this talk about all the metal coming from London to the United States, and it started weeks ago saying it was the Trump tariffs.
We started talking about it. I think I rang you up and I said something really weird's going on, and we jumped on a quick call, didn't we? We recorded a quick video to say what was happening then, didn't we?
We did, but it's getting much more weird by the day. And I think it's, to me, what we see are signs of stress in the system. And I don't know, I guess it's fair to say, Jason, I don't know how this plays out. I'm not an expert in the delivery mechanism from COMEX to the UK, and from the UK back, the exchange for physical. And I don't know what the ultimate plans are. But to me, what I see, at least I can say, seems heavily focused in American interests. I'll say that first and foremost, because since November, the United States has become a net importer in gold. And As far as I can remember, we were net exporters, and we've imported just from London somewhere north of 13 million ounces of gold since November. This is massive amounts, but a few things happened that I think are worth mentioning, and please feel free to stop me and chime in at any time. On the February contract that, here we are almost the end of February, a record breaking 59,296 contracts stood for delivery on the February gold contract. That surpasses the previous record by over 12,000 contracts. It's 5,929,600 ounces of gold stood for delivery. Now, that doesn't mean it left the COMEX, but it means that the other side of those short trades, the long, said, you know what? We'd like it delivered into our account. Now, we can argue about how much actually left the facility and went places like China or wherever it went. But the fact that these players did not accept cash settlement or more paper by rolling it over and said, no, we want the real thing. The largest previous delivery was 47,132 contracts at 100 ounces apiece. That's 12,164 contracts less, over 1.2 million ounces. Something big is happening. And then JP Morgan says, we're going to deliver 4 billion in gold in the COMEX in February. And they said very clearly a few years ago, Blythe Masters, who used to run their trade desk, we don't buy for ourselves, it's for a customer. So what customer has 4 billion to drop in gold? I guess it could be Warren Buffett, it could be the Fed, could be the Treasury. I don't know. But there are things crazy. And speaking of London, all of the gold now, it's not just coming from London, Singapore and Switzerland and other places around the globe, but London is a T+1. The LBMA is a T+1 settlement. Trade day Monday, +1 Tuesday. I should have access to my metal on Wednesday. They're 8 weeks delivered now, back ordered on delivery now, and they claim it's about a shortage of manpower and trucks and of refining because the 400-ounce gold bars are not accepted in the U.S. They'd have to be refined in Switzerland. One other thing, and then I want to just read one other thing, and I'll get your take. Now, the lease rates are coming back down a little bit, but the lease rates had spiked way up. And the lease rates, this would be an example of when the lease rates would be needed. I'm a jeweler, and you're my manufacturer, and I need to make jewelry, but they say that's 8 weeks delayed on delivery. What do? I lease a bar. Used to be those rates were just a couple tenths of a percent, and then they spiked way up to north of 6 or 7. And so normally I would lease a bar, I would give it to you, the manufacturer, to make my jewelry. And when I got my bar, I'd settle everything up and be made whole at a very small cost. The lease rate spiked. I want to read something to you because I find it very interesting. I asked AI, what would you see if there were signs of a failure at the LBMA? And listen to what they said. First, widening divergence between paper and physical prices indicating delivery stress. At its peak, it was an $82 difference in New York versus London. I don't know what it is now, but I think it's about 25 or 30 bucks more. So you can buy a contract in London, take delivery, or sell it in New York rather, and make that arbitrage. But when you factor in the cost of moving it and everything, is it really worth it? Don't know. But anyways, widening divergence between paper and physical prices. That was huge. A lot of people said that's why the gold was coming back, to take advantage of that widespread. Second, reports of delayed deliveries or contract settlements. T+1 is now T+8 weeks. Check and check. Unusual gold lease rate spikes reflecting increased borrowing costs for physical gold. Check. Major disruptions in supply chains, including mining, refining, and transportation. They said delays in refining, delays in trucking, and then there's the banking sector instability affecting LBMA member banks. That's the last piece of the puzzle we haven't seen yet. That's the bad one, where the systemic nature of all these banks that are connected, what could it mean if one fails to deliver? Anyways, I found it interesting that AI cited 4 of the 5 things that they would think would be present if there was a collapse. So whatever's going on, Jason, I don't know, but I think it's massively bullish for gold. What do you think?
I think it's totally bullish for gold. It's very bullish for gold. You know that we supply one of the US states' gold reserves. And we've been seeing this and observing this in the wholesale market right now for about 4 or 5 weeks. That's why I got in touch with you and I said, hey, Andy, there's something really strange going on here. People are starting to really worry about being able to get hold of the physical metal at a normal price. The thing is, I keep saying to people, it's still a very liquid market. It was just the price you had to pay for these bars And at the time, it was like $52 an ounce when I spoke to you was the premium. And just for everybody's perspective, it's normally $1.50 is normally the premium on these gold bars. And that's for delivery into vaults like in Salt Lake City and places like that. Suddenly it blew up to $52 an ounce. That's a crazy amount to be paying for the gold. And why is it not? I was thinking, why is the price not just going up? Of course, the price was going up, and it was going up so fast. Effectively, these premiums didn't have time. The price was going up, and people, there was still huge demand for the gold. In other words, people weren't selling their gold. Everybody in America was holding on to it. They didn't want to sell it. Nobody wanted to sell. And
And
if
you're
you
talking
really,
100 ounce. Are you talking 100 ounce or kilo gold bars?
I'm talking about the James Bond 12 and a half kilo bars, those
400
ones.
ounce gold bar,
Yeah,
good
yeah.
delivery bar. Yeah,
Yeah,
well,
good
that's
delivery.
that's the scariest part of everything you're saying, Jason. That's the top of the pyramid, and everything
Yeah.
comes down from there. So I hope everyone's listening to what Jason's saying. Please continue, but this is the top of the food chain, and if the bars at the highest level of refining and demand for industry are that hard to get and have increased that much, what that is a precursor in my mind for as it filters down into the rest of the
Yes.
gold ecosystem.
I mean, this is the kind of gold that's held at Fort Knox. This is the kind of gold that's held in the Bank of England. And as a result, nobody wanted to sell their gold. What was happening is people were we had to go to London and pick up the gold from London. We managed to get it at $5 an ounce premium, which is still hugely cheaper than the 52. Sorry?
Does that include shipping? Oh, you're
Yes.
leaving it, you're sending it to London. I'm sorry, not
No. This was buying it in London to take
bringing it to the
into
United States.
bringing it to the United States. Yeah.
Does that include shipping at $5?
Yeah, it did. Yeah. So that was very good price. We were really pleased with that. But of course, JP Morgan, all the big bullion banks, they all woke up and they were hoovering up the gold in London. And of course, you've got a situation where the Bank of England does hold a lot of gold for third parties, but it's not a transactional vault. It's not used to gold moving. That gold never moves. It's gaining dust on it, and it never moves. They're not set up to be moving gold. So of course, any gold that was being bought from the Bank of England, it was taking them completely by surprise. And suddenly there were headlines saying 2 weeks to get your gold out of the Bank of England. Like, what's going on?
And now it's
sorry.
And now it's gotten as high as 8 weeks. And
Yeah.
yes, I'm sorry to interrupt you. I'm just saying, how could they not expect it when they're 90% paper derivative in a market that is demanding physical delivery? You have to wonder who's running the ship there.
So then, of course, these big bars were then being sent into the Swiss refineries to be refined into the size of gold bars that are traded on the COMEX. Are they 100 ounce, I think?
Yes, and they do have kilos for the mini contract, but yes, primarily 100 ounce.
So the whole system went into overdrive, getting the gold, refining it, shipping it, flying it across to America. This is massive. This is similar, as you said, this is similar to the dislocation we saw during COVID, when metal physically could not be moved between London and New York because of lack of airplanes and ships and transportation movement between the two continents. And you got to ask yourself, as you said, why is so much gold coming into America? Why is nobody selling their gold in America? I'm actually surprised that the gold price hasn't already shot through $3,000 an ounce, because if you can't get hold of it, then why isn't it even at higher prices than it is now?
You're right. It should be. Again, the price is still quoted or controlled by the futures market instead of by the physical market. That will change, and you can see how that is beginning to change. And to be naked short would be very silly right now in physical gold and physical silver, and it's even worse in silver. In the LBMA, they have 290 ounces of silver. Last I checked for the float, 300 million ounces of silver for the float, and they trade upwards ends because they say about 290 million ounces on average, but they say those numbers are up to 10 times understated, because they only post the final settlement numbers, meaning they're trading upwards ends of 3 billion ounces a day on a 300 million ounce float. And you're talking 90% paper again. It's insanity. That's 3.5 times annual global mine supply every single day. So at some point, these markets, which I think part of the reason that this is happening is the delivery mechanism is being exploited. And it's not just the United States. We see a lot of gold and silver coming here, but it's other countries as well. And that's part of the deal. You said very eloquently that these contracts never move. The gold never moves. It's a cash settlement, but that's the Achilles heel to the system. Yes, it is, but they also are spot delivery contracts. And if you get large players like sovereign nations like the United States or like India or sovereign wealth funds from Saudi Arabia or wherever it is, yeah, standing for delivery is not a problem. They don't care about the price fluctuations. And then we can talk about what are the ultimate reasons for this, and we can speculate.
Yeah. As you've said plenty of time, the simplest, most elegant explanation is usually the one closest to the truth, Occam's razor.
Right.
And now you've got Trump and Elon Musk. They are banging the drums about gold on Air Force One, saying, yeah, we're going to go and audit Fort Knox. Elon Musk saying, we're going to live stream it. Trump saying, what do you mean if the gold's not there? Yeah, we're not going to be very happy. And now, yesterday, Tucker Carlson, really big part of the Trump machine, having a whole interview about gold and about this whole thing that we've been talking about for the last few weeks. Why would they be doing that? And I think the obvious solution is that gold that's currently on the US books is still valued at $42 an ounce. And maybe, Andy, you could explain why the gold that's on the US books is only valued at $42 an ounce.
It's only valued at $35 an ounce in London and the rest of Europe, the old Bretton Woods price. And when Nixon closed the gold window in 71, he in 72 raised or devalued the dollar or revalued gold. So this is not unprecedented. He revalued gold from 35 to 38, and then the next year from 38 to 42.22. It's held, ironically, in an account called the gold revaluation account. And that's every central bank account holds gold in a gold revaluation account on their central bank balance sheet, which is ironic. And we've heard—
You can't make it up. It's hiding in plain sight.
It is. But we've even heard members of the Bundesbank and the head of the Dutch National Bank for years say we should revalue the gold on our balance sheet in the gold revaluation account, at least market to market, from 35 to 2,900 to offset our liabilities. And then you get Cynthia Lummis, the senator from Wyoming, who is advocating for the strategic Bitcoin account. And the way of funding it, she said, speaking at the Bitcoin conference after Trump, is to, and she's written a bill to revalue gold held in the revaluation account to a level sufficient enough to come up with proceeds to buy more Bitcoin for this strategic account. The moral of the story is it's hiding in plain sight, as you mentioned. And why stop at market to market? Why not put it at 10,000 an ounce, 12,000, 20,000? James Rickards says 24,000, I believe. And he used a 40% gold backing, which is what the Swiss used, which is what the BRICS said they've agreed to in principle for their common settlement currency, the unit, 40% gold back. And I think the way he got his number was by taking M1 or 40% of it and dividing it into the gold at Fort Knox, and came up with this large number. If it really was 24,000 an ounce, every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear. It would enable our assets and our liabilities to be more in line with reality instead of moving to a situation where we're literally 300% debt to GDP. Excuse me, 130% nearly, but 120% debt to GDP. At 130, I don't think a country's ever come back from that in history without hyperinflating or outright default. So this is a way, instead of hyperinflating, it's a way to achieve what they want to do, I think, and do so in a way that's less dramatic. It would benefit all the central banks who have been holding gold. And could it happen? Yeah, I think it actually could happen, especially Judy Shelton is talking about issuing treasuries backed by gold, deliverable in gold, and says Trump will issue them on July 4th, 2026. She was his nominee for the Fed, head of the Fed in 2016, wasn't confirmed, but has been an ally and an advisor ever since. And I wouldn't be surprised if she runs the Fed this time around once Powell's tenure is up. And she said, Andy, he will most likely, we've discussed this, issue gold-backed redeemable treasuries on July 4th, 2026, the 250th year anniversary. And I asked her flat out about auditing, and she said it's a stupid reason that they've never audited the gold, a real audit. And I think it was Koos Jansen who did an article talking about really that it's a fraud and that they say that it's been audited. It really hasn't. He has all sorts of information, even with the Freedom of Information Act, I think that's who wrote it. And if not, I apologize. But anyways, bottom line is she said, the United States, for God's sakes, we should spend a few $1,000,000. We need to inspire trust again and forget about how logistically challenged it is. Just do it. And then I said, gold's held in the revaluation account, Judy. That's the name of it. Do you think they'll revalue gold in order to get gold high enough to collar it to U.S. treasuries? And not directly, but not in so many words. I believe she said yes. I do believe that. Look, we're heading to a time where gold is becoming more important. And of course, you can discuss what you think about the gold constitutional angle with all the states. That's your angle. And maybe that's what it's about as well. There are lots of American-centric ideas that could spring from repatriating and reshoring all this gold.
Yeah, I think that it's no coincidence that the CFO of Florida, Jimmy Petronas, Trump's handpicked candidate to be one of the next senators for Florida. You've got in the Utah work group on precious metals, the former vice chairman of the Federal Reserve, Randy Quarles, on the work group saying, yes, if people want to be able to save in gold and spend it in dollars using a system like Glint, then why shouldn't they be able to do that? With all these states, 22 different US states now working on legislation, drafting it or submitting or even voting on this legislation to make transactional gold or constitutional gold currency, which is their right under the Constitution. You probably don't know that, but Article 1, Section 10, Clause 1 of the US Constitution does forbid any state to make its own currency except gold and silver. And here we have the US states now passing these laws. In Utah, they're the first out of the gate, really, in this legislative session. They've gone out like a champion racehorse. They've gone through the House committee with a 7-1 vote in favor of this, bipartisan, unanimous support. They got to the House floor, bipartisan, unanimous support, 71 votes to nil. This has never happened on anything. This is unbelievable. It's uncharted territory we're in here. And of course, this is happening in other states too. Oklahoma, North Dakota, Texas is submitting its bills. Florida, I believe, is going to be submitting its bills soon. This is unbelievable. This is happening across the whole of America. And of course, the gold price is going up. It's at 44% this year alone. And if Trump was to put a tariff on the UK, you could see the gold price jumping 25% in the next couple of weeks if that was to happen, because the arbitrage would just blow up so big. It would blow up 25%, wouldn't it? If it looks like a reset, if it smells like a reset, it is a reset. They're doing everything in their power to power up gold. And gold's not been on anyone's lips for as long as I've been trying to set up Glint since 2008. I've been feeling like I've been fighting a really lonely battle, Andy, until I found out that in America, there's a whole army of sound money advocates that want to make this happen. People like heroes like yourself, heroes like the legislators passing this legislation in America. It was just the most refreshing thing ever, but it was still a minority compared to the bigger world and economy out there. And to suddenly see the president of the United States, the richest man in the world, some of the biggest alternative commentators in America, all now this week talking about gold is incredible. Why are they doing it? It seems pretty obvious to me. They're all pretty bullish on gold. So I think there's a good reason for it. And as you said, if they wanted to give themselves some more funds, then the easiest way to do it, Doge is a very difficult way to do it. You've got to cut hundreds of thousands, if not millions of jobs. You've got to tear up plenty of contracts. It's very disruptive. The easiest thing in the world is just to unleash gold and let it go. And of course, you could be doubling the price of gold in no time. And of course, what does that do to the books? Does it give the US trillions of extra spending power?
Every $4,000 increase is $1 trillion free and clear to the general account. You got to wonder, makes me wonder, is this Ponzi scheme coming to an end? And it's not just the United States that's waking up. It's all the BRICS nations that are waking up as well. And the question is the emperor wearing any clothes or not? Because it's become very obvious that there isn't enough gold to back up even a fraction of the paper promises. And is this the beginning of a run? I don't know. But I'm saying that could very quickly spiral and contagion, because these are some of the biggest banks in the world. It's very interesting to say the least. And in that Tucker interview, I found it interesting. Tucker was talking about hanging out with some of he mentioned a guy is one of the wealthiest guys in the world, and you know him. And I asked him, do you own gold? He says, yeah, I own gold. And he's intimating that the very, very wealthy people understand what's happening. And Trump talking about, Elon talking about it. The question really is, and I thought he also made a very interesting point, that since roughly 2014 net, the central banks of the world have not been purchasers of our treasuries net. Excuse me. And that they've been selling $400 billion worth of bonds, while at the same time accumulating 650 or 700 billion worth of gold. And so he's saying it's interesting that the major purchasers of US treasuries is the American public, the retail investor, through money markets or going directly and buying treasuries, chasing yield. And it's interesting. He says when everyone is moving in one direction and no one is moving in the other direction, that's a sign. And except who? Who's the only other ones moving in that direction? The most well-informed and well-funded traders in the world, the central banks. And now quietly, the United States government becomes a net importer of gold, while the public on the retail side is fixated on 7 stocks, a tremendous amount in money markets, over 7 trillion, and in fixed income treasuries, if you will, for a massively indebted country. And then, of course, a lot in cryptocurrencies. But the biggest money in the world is overtly scrambling to get a hold of gold and silver. That should be a contrarian indicator for people. And I think it speaks to something very big for gold. And I don't want to say for much higher prices, even though that's how I feel. Let's just say there's something in store for gold, and we'll find out what it is. But what is happening right now, Jason, is so far outside anything we've ever seen in terms of market action or dynamics at that level. I've never seen anything like it in 35 years. So
it could be just a genius reactive move. Of course, it doesn't have to be proactive. We've already been talking about BRICS nations and the idea of a BRICS gold-based currency for the last year or two. And maybe the US needs to react to that, because the one thing it needs to defend is the US dollar being the main medium of exchange. That's really what gives the dollar and the country its power, not the store of value so much, but the fact that it is the medium of exchange. It is the way in which the whole world ticks and talks, is through the payment system that relies on those US dollars. And potentially, as we were speaking then, I just crossed my mind to think maybe it's just that they know the rest of the world has been hoovering up all the gold, and they're realizing that if they're not careful, when everybody else has got the gold and using that as a store of value, it makes it easier for them to challenge the medium exchange. Whereas if actually the US now embraces gold, as the East has been doing for the last 10 years, then maybe actually it pulls the rug from under their feet, because the US now has got a huge amount of gold too. Well, I don't know. It's crossing my mind as we speak.
Think about this too, Jason. If last year a 4.5% return on the treasury versus 27% on gold with no counterparty risk, why would these people want to hold our dollars or our treasuries? Why would they want to? So and then think about what on that Tucker interview was saying, hey, during QE, they print money to create $1 trillion worth of treasuries. That's how easy it is for us to do it. And Saudi Arabia would be saying, why would we want to spend all this time and energy and effort to pull oil out of the ground and send it to you to get dollars and treasuries invested? In part of the petro deals, recycle in treasuries, when you just punch keys to get it. That doesn't work. And nor does the fact that the treasury market is lagging that far behind to gold. It's doubled it. Gold's doubled it, the 10-year treasury, for the last 25 years. But now it's accelerating with no counterparty risk, no sanction risk, no threat risk. That's a scary thing. And if that continues, the fiat game is over, because there's no incentive to hold dollars, certainly no incentive to hold US treasuries. And the dollar would have zero power in that respect if all of a sudden everyone's dumping it to buy gold. Anyways, it's interesting. If we have to print our way and convince people that the printing we're doing isn't devaluing the dollar, I don't know, gold is the metric of that value. And it's telling you that the dollar is inflating itself away, and the demand for the treasury is waning in respect to gold. I think that in and of itself speaks to massive potential
If people are suddenly starting to wake up that effectively the dollars they're buying are literally printed like monopoly money, in fact even easier than printing monopoly money just on a keyboard, then maybe the savvy thing to do is to use the dollars whilst you can to buy as much gold as you can whilst you've got those dollars have some semblance of value still.
Well, even more is the treasuries. Why hold treasuries? Stop pouring all your money into money markets and treasuries and put some into gold, which is literally doubling, tripling. In this case, was a difference of 6 times, almost 7 times, without any of that default risk, inflation risk, or sanction risk. So interesting times for sure, Jason. No question about it. And again, I applaud your efforts with the state legislatures and reintroducing gold. And these are the things that I think people need to understand. And then let's not forget, the banks are wickedly over leveraged and undercapitalized. I couldn't think of a better reason to keep money in glint. You've got your physical gold, you've got your physical silver, but you got too much money in the bank. Put some into the glint account and have physically held metal, and even in dollars if you want, that's in the bank. But it'd be better to have physically held gold for a portion of that money that you use for transactions, or potentially would use for transaction, in an app like Glint, in a vault that is allocated in and fully insured with Brinks and Zurich. To me, that's where the real sweet spot is. I would feel much more comfortable having 100 grand in gold on my Brinks account than I would sitting in a bank account. Ask the folks in Lindsay, Oklahoma about that. They lived through the first bank bail-in that I can remember since the Dodd-Frank Act last October. Half of those uninsured deposits are gone, but all the gold that people have in Brink Zurich is still there. So I think that's things that people should think about in terms of Glint. Yes, it's great for transaction, but it also gives you the ability to transact while at the same time disintermediating yourself, if you will, directly from the banking system. So I don't know. To me, that's the big bonus, the big benefit.
And as we've said before, it is just one other weapon in the battle to persevere and to strengthen your resilience, as we talk about on this podcast all the time, the resilient compass. This is about saying, yes, you need some gold bars and coins. You need to get Andy Scheckman and Miles Franklin team to send you some bars and coins. You need to have them on you. Why not have some of your ready money in gold? And of course, you can do that with Glint. So look, big shout out. Thank you very much for that, Andy. I appreciate that. But let's just go back to the US state stuff. Let's be really clear, guys. If you don't quite understand what's happening there are 22 different states working on passing legislation to use their constitutional right to enable gold, transactional gold, as legal tender, as currency. That list up there isn't the most up-to-date list. I keep losing track of what's going on. This legislation is happening tomorrow at 8 a.m. till 9:50. The committee, I think, on taxation and revenue in Utah, for instance, is hearing the same case that the House and the House floor in Utah heard just over the last couple of weeks. If it gets through that and it gets to the Senate floor and it's passed, this will be a reality. And actually, it's up to you. I think this is the biggest opportunity that American citizens have had since the formation of the Constitution itself, to make sure that they use that right to be able to have constitutional gold currency, to have sound money that isn't depreciated in ways that are outside of your control, that isn't used to be able to manipulate you. Hard money. This is what you have been waiting for. And whether you're a crypto fan, whether you're a gold bar and coin fan, whatever you are, you believe that everyone's right to be able to hold their purchasing power. You believe that it is an anathema. It is appalling that the purchasing power of your money, that the weights and measures by which men and women conduct their lives is corrupted in the ways it is through fiat currency. Then this is your chance. You need to get behind these legislators. You need to be testifying yourselves. Everybody has the right, did you know that, to go on to the committee hearings and get behind the videos and get up on there and say, yes, I vote, by the way, I'm supportive of this bill. I think you should pass it. Can you imagine if we broke the internet and got tens of thousands of people to get in touch through the websites of these legislators and actually did that and make them realize how important this is for people? I'm half joking, but these legislators are heroes. They're working really hard to bring this legislation through to reality. They need your support. Now, we've seen phenomenal things in these early day part of this session, but this session is going to be over like before you can blink. I think in Utah, they've got something like 15 or 20 days left. It's got to get through the Senate committee. It's got to get on the Senate floor. All the senators, the legislators, they're all wondering which of the bills should they prioritize. We need to say, this is the bill we need to prioritize. This is important to me.
How do
It's
they do that,
important to my
Jason?
children.
How do they do that?
I think everybody, if you're in your state, you got to find out who your legislator is who's backing this type of bill, or you just ring up your local representative and say, or email them on their websites. There's an email, say, hey, I want constitutional gold, full stop. I'll vote for you again if you give me that. And that's all they need to do. Press the button, send it. And if tens of thousands of people did that, it'd be amazing. The legislators would like wake up and go, wow, this is what people really want. Pick up the phone, ring them up. When that happens, their whole phone systems go down and they're like, oh, right, really, we should definitely be, this is definitely an election winner. At the end of the day, they make movements based on what they think is going to keep them in power. They not necessarily just to keep them in power, but they want to know what you think. They're there to represent you. And I think it'd be fascinating to do like maybe even a live stream tomorrow whilst that committee hearing's going on. And maybe we could publish some of the instructions about how you can submit your views on this. But this is all part of what we're talking about. You've got Trump, you've got Musk, you've got the whole administration saying gold. We're talking about doing audits on Fort Knox. We've got gold going at $52. Or did you say it was up to $80 an ounce premiums? You've got no one selling their gold in America. This is the moment. Now 22 states. This is the best and most important thing for sound money that has happened in decades.
Yeah, no, it's exciting. And the fact that you're at the forefront of it, I hope more people understand how important this truly is. And if you would have told me at any time in my career that there'd be 22 states with 11 already passing some form of legislation to allow gold and silver as legal tender, even paying your property tax, I would have said there's not a chance in hell that'll ever happen. And the fact that it did, it's very inspiring that there are people, state legislatures out there that are protecting their constituents. Kudos to you. Hopefully we see more states embrace this. And
they're talking about allowing you state employees to be paid in gold. They're talking about allowing people and vendors to be paid in gold. They're talking about people being able to pay their taxes in gold. And of course, they're saying no capital gains tax on a state mandated currency, which means IRS, keep your hands off it.
I think that's something people ought to really embrace, because it's silly that we're paying capital gains tax on selling legal tender. Even things like junk silver, dimes and quarters, which is legal tender.
It's immoral. It's totally immoral that people are having their just by trying to keep their purchasing power, they're being taxed. They're being, you get taxed when you earn your money. You get taxed when you inherit your money. You get
That's why we left you guys, by the way. That's why we bailed from London. That's why we left England.
Yes. Yeah. And right now I'm getting taxed a lot. We're all getting very taxed here with our Labour government.
Well, maybe you should get on a ship and sail this way.
Subject. I'm already there about 1 week out of every 7, so we'll see. But
I appreciate it, man, and you're doing a good thing. And look, I'm not trying to shamelessly plug the Glint app. I love it. I show it to everyone. I think it's really cool, and it's nice to have something cool. When you talk about gold, is old school, and it's kings and queens and emperors, and it's been money for 5,000 years. But this brings it.
Yeah.
This meshes technology that's eloquent and fantastic with gold, and everyone is blown away by it that I show, and I think it's worthy of that type of championing. So, anyways, call it shameless plug, but I mean it.
Let's just hope the rest of the gold industry can get behind this, because too often they don't talk about it. Andy, you're amazing. You're very self-confident. You don't see anything like this as a threat. You see it as something that's going to help grow the whole industry. But again, even in the Tucker interview, they never mentioned anything about the ability you can use gold transactionally now in electronic payments. That is already happening with hundreds of thousands of people across America downloading the Glint app and getting on that. And of course, these committees, hearings, the work groups, the study groups, the legislation that's being passed at the state level. So if you are interested, we're just showing you the transactionalgold.com website. Nothing to do with Glint, but it's those guys in Texas. There's a brilliant book you can read called Pirate Money. So check out the Pirate Money book by Kevin Freeman. He's a constitutional expert on all of this and on sound money. He's a consultant to all the three-letter acronym departments within the government. He's written a book called Pirate Money. You should definitely order that on Amazon, and it's like you can read it for 3 or 4 nights in a row before you go to bed, and you'd have read the whole book. It really clearly maps out the vision that the Economic War Room, they're on the Blaze TV as well, have for constitutional gold currency. So they're a great group of people. I met them just about a year ago, and it was like a breath of fresh air to suddenly find out again there was like a whole crack troop of special sound money advocates out there helping this grassroots movement across the United States. And that's the other nice thing, Andy, about it, is I've discovered that this is pure grassroots across the whole of America. This is people organizing themselves, working with legislators, supporting those people. It's not that you've got a big deep state kind of initiative to make it happen. Although maybe that is happening in conjunction with this. I don't know. It's confusing, but you've also got the Florida Trump mafia all wanting this to happen too, with Petronas wanting this to happen. Go and check out his press release.
It's going to happen now under this sound money movement. Call your legislature, and I couldn't think of a more worthy endeavor. It's always good to have options, and holding your dollar that's losing its value by the day through inflation isn't really a good store of value. It's not a good way to retain your wealth or to hold it. No, I think that's fantastic. I couldn't think of anything better than the states to start adopting gold and silver. And even like Iowa, if I'm not mistaken, they're making their own gold coin for the state and silver coin for the state for transactions, and pushing back against the lunacy and the irresponsibility of the fiscal and monetary policy of this government. And God bless Trump for doing what he's doing, but I don't think he'll be able to break away from inflation. I think inflation is going to get higher. It's never been more important to find alternatives. So keep at it, Jason. Keep at it, brother. I'll stay by your side and ride shotgun and do the best I can to help and spread the word. I've tried. Lord knows I've tried for the last 4 years.
Yeah, I know you have. But one of the things, Andy, I really want to know is Amazon have bought the James Bond creative rights out now. And so we might have the recreation of the famous movie Goldfinger. And I just keep looking over there, that's a white doggy you've got, isn't it?
It's one of 3. Normally there's chaos. I got another one.
Yeah, I think Fleming got it totally wrong. I think it wasn't the cat. He got it totally wrong. The bullion baron himself, he's going to play Goldfinger. You're going to be you're going to be stroking your white doggy.
Chris Marcus used to call me the James Bond of metal, and you call me the bullion baron. My wife calls me an idiot. So somewhere in between. But I appreciate that, brother. I do. And
listen, Amazon, if you're listening, this is the man you need to base the movie on.
That would be amazing. Yeah, I'm in.
And then maybe we have the gold infamous solid gold debit card that comes out at the casino.
That would be very cool. I'm waiting for you to be able to release that gold card here in the United States. Hopefully one of these days soon.
You'll be the first, Andy.
I appreciate you, Jay, and
I appreciate you too.
Look forward to chatting with you again here next week and picking up where we left off. Lord knows there'll be a lot to talk about. But
so just remind people, if they want bars and coins, what do they do?
The best way would be to send us an email at info@milesfranklin and ask for our price list. We really don't publish much of a price list on our website, but our private price list that we send out, no obligation, no one's going to call you, will be amongst the best in North America with selection and price. And any questions you've heard on this podcast or others, or questions related to economics, precious metals, you name the word, we'll reply, no obligation. info@milesfranklin.com.
Great. And if you want to put yourself on your own personal gold standard, of course, head over to your famous app store, download the Glint app. It takes just a few minutes to be able to register. And then you can buy some gold. You can get yourself a Glint card delivered, and you can start when you need to. You can spend your gold just as easy as any other form of money with the Glint MasterCard, almost anywhere it's accepted in the world. And it's available, of course, to people in the US, where our biggest market is. We love you all. We hope you stay well. Until next time.
God bless.
Bye.